Ever wondered how money zips across the country, especially when it's not a simple bank-to-bank transfer? How does that intricate dance of funds happen, especially when different financial institutions need to talk to each other? We're not talking about your everyday ATM withdrawal or a direct deposit from your employer. We're talking about the backbone of large-scale financial transactions in the USA, relay banking. Think of it this way. You're trying to send a package to a remote town that your local courier doesn't directly serve. They have to pass it along to another courier, who then passes it to another, until it finally reaches its destination. That's essentially what relay banking is for money. It's the behind-the-scenes network that enables financial institutions to move funds when they don't have a direct relationship with the recipient's bank. Now, why is this even necessary? You might think in our digital age, everything should be instantaneous. But the reality is, the U.S. financial system is a complex web of thousands of banks, credit unions, and other financial institutions. They don't all have direct lines to each other. That's where relay banking steps in. Let's break it down. Imagine a small credit union in rural Montana. They need to send a large sum of money to a major corporation's bank in New York City. The credit union likely doesn't have a direct relationship with that New York bank. They need a middleman, a relay, to handle the transaction. This is where correspondent banks come in. These are typically large, well-established banks with extensive networks and the infrastructure to process high-volume transactions. They act as intermediaries, allowing smaller banks and credit unions to access the broader financial system. So, how does this relay system actually work? It's all about the magic of the Federal Reserve. The Federal Reserve System, or the Fed, acts as the central bank of the United States. It provides a crucial infrastructure for relay banking through its FedWire funds service. FedWire is a real-time gross settlement system. That's a mouthful, but it basically means that each transaction is processed individually and immediately. When our Montana credit union wants to send money, they initiate a FedWire transfer through their correspondent bank. The correspondent bank then uses its FedWire account to send the funds to the recipient's bank, also through FedWire. But FedWire isn't the only player in this game. Another key system is the Automated Clearinghouse, ACH, network. While FedWire handles large value, time-critical transactions, ACH is used for smaller, recurring payments like direct deposits, bill payments, and online transfers. ACH operates on a batch processing system. Instead of processing transactions individually in real time, ACH collects transactions throughout the day and processes them in batches. This makes it more cost-effective for high-volume, low-value payments. So, when you set up a direct deposit from your paycheck or pay your rent online, you're likely using the ACH network. Your bank sends or receives these payments through an ACH operator, which consolidates them and sends them to the recipient's bank. Here's a simplified example. Let's say you're using an online payment service like Venmo to send money to a friend at a different bank. Venmo isn't a bank itself. It uses the ACH network to facilitate the transfer. Venmo initiates an ACH transfer, which goes through its partner bank to the ACH operator. The ACH operator then routes the transaction to your friend's bank. Another crucial aspect of relay banking is the role of SWIFT, the Society for Worldwide Interbank Financial Telecommunication. While FedWire and ACH are primarily used for domestic transactions, SWIFT is the global standard for international wire transfers. SWIFT is a messaging network used by banks and financial institutions worldwide to securely exchange information about financial transactions. When you send money to someone in another country, your bank uses SWIFT to communicate with the recipient's bank. SWIFT doesn't actually move the money itself. It provides the secure messaging system that allows banks to instruct each other to transfer funds. It's like the international language of banking. So, to recap, we have FedWire for large value, time-sensitive domestic transfers, ACH for smaller, recurring domestic payments, and SWIFT for international wire transfers. These systems work in tandem, often through correspondent banks, to facilitate the movement of funds across the financial system. Now, you might be wondering, what are the benefits of this relay banking system? Well, it provides several crucial advantages. Firstly, it ensures interoperability. It allows financial institutions of all sizes to participate in the broader financial system, even if they don't have direct relationships with every other bank. This promotes competition and accessibility. Secondly, it provides efficiency. By leveraging these established networks, banks can process transactions quickly and efficiently, reducing costs and delays. Thirdly, it enhances security. Systems like Fedwire and SWIFT have robust security measures in place to protect against fraud and unauthorized transactions. However, relay banking also comes with its challenges. One major concern is the risk of money laundering. Criminals can exploit these complex networks to move illicit funds across borders. To combat this, banks and regulators have implemented stringent anti-money laundering (AML) and Know Your Customer (KYC) regulations. These regulations require banks to verify the identity of their customers and monitor transactions for suspicious activity. Another challenge is the potential for systemic risk. If a major correspondent bank fails, it could have a ripple effect throughout the financial system, disrupting the flow of funds and causing widespread instability. Regulators are constantly working to mitigate these risks by strengthening oversight and promoting greater transparency in the relay banking system. And of course, there are the costs. Correspondent banks charge fees for their services, which can add to the overall cost of transactions. These fees can be particularly significant for smaller banks and credit unions. The future of relay banking is likely to be shaped by technological advancements. Blockchain technology, for example, has the potential to streamline cross-border payments by eliminating the need for intermediaries. Central bank digital currencies, CBDCs, could also have a significant impact on relay banking. These digital currencies, issued by central banks, could potentially bypass traditional correspondent banking networks. But even with these innovations, the fundamental principles of relay banking are likely to remain relevant. The need for efficient and secure mechanisms to move funds across the financial system will persist. In essence, relay banking is the unseen engine that powers the flow of money in the U.S. and around the world. It's a complex system, but it's essential for the smooth functioning of our financial system. With that said, thanks for watching, and until next time.